Welcome to the Point of No Return podcast, an exploration of strategy, leadership, technology, and entrepreneurship. Your host, Nectar, is the co-founder and partner at the PNR, a strategy consulting firm based in Montreal.
Hey everyone, and welcome to the Point of No Return podcast, a show where we interview industry leaders, presidents, and CEOs to better understand how they think about strategy. On today's show, I had the pleasure of speaking with Thibaud Marechal, VP of Growth at Kn0x. Thibaud is a friend of the show, so it was an easygoing conversation. I've known Thibaud since his time at Real Ventures, where he was head of platforms, and previous to that, he was program manager. We spoke about his career, how he got started from McGill and helping launch X1, and then moving into Real Ventures, and then from there discovering something called the crypto world, and really diving into crypto assets and how he really became enamored by Bitcoin and everything crypto related. So if you follow Thibaud online, you're going to see he's a little bullish on Bitcoin, to say the least. So we did speak a little bit about Bitcoin and where he sees the economy moving in terms of the world of finance. We spoke about decentralized versus centralized systems. We spoke about security versus trust in institutions. And we had a good wide-ranging conversation about the world of Bitcoin in particular. So you could tell he has very strong opinions about it. And that's why I really enjoyed today's conversation. And I hope that you do as well. So Thibaud, before we start talking about imaginary money, first question for you is, I want to go back to your time at McGill and the idea for McGill X1. How did it come about?
Yeah, so actually in the summer of 2013, I was sent by McGill to the MIT Global Founder Skills Accelerator program, which was a program created by MIT in Boston. And the goal was to help young founders with a science project or any type of interesting technology and help those founders build a company out of it. And not only build a side project on a weekend, but actually think of, how do you market this product? How do you go about finding customers? And so pretty much I did this program, came back to Montreal, and the director of the Entrepreneurship Center at the time, called Greg Vitt, was really fell in love with the program and the whole project, and was like, look, we need to bring this to Montreal, add a little flavor to it, make it our own. And so that's how the MIT GFSA was ported over to Montreal under the flagship of the Dobson Center and called the McGill X1. And the X1 is actually the name. It's a fun little story. It comes from it's a plane. It actually is the first plane that ever broke the sound barrier. And so that was a cool thing. And also it was this notion of going from X, which is the unknown variable, to 1, which is a certain net positive. So yeah, and we launched this program in 2015, and I think it's been running since then every year. And it's amazing to see this thing, sort of help more and more entrepreneurs, particularly in the medical field and at McGill as well, because there's a lot of research that is being done there. And I think last year they received a grant of $2 million. So yeah, good to see it going again.
Yeah. What do you think was your biggest learning by being involved and helping launch?
Oh man, working with PhDs, it's not easy. PhDs are, and again, this is a very generalized statement, so I apologize for most PhDs who feel, who are going to listen to this. But yeah, producing research is one thing, and it's extremely hard and difficult, and it requires a very particularly type of brain, I would say. And building a business, bringing that idea to market and being willing to hear that your baby is ugly is another. And it requires a complete shift in the mindset. And so, yeah, I found that helping scientists really absorb the market realities and adjust their product was a really challenging piece, but also extremely interesting to go through.
Yeah. What are you proudest of? You mentioned like the helping entrepreneurs, helping startups.
Working with early teams who are trying to figure out many different things at once in a context of high uncertainty was extremely rewarding at the time. Now, what I would say is I'm proud of is seeing this program is still running and it's not a one-off. I think I was really afraid of just leaving McGill and seeing this thing just die in the layers of bureaucracy, because it took a lot of effort to basically get this program not only off the ground, but recognized and accepted by the administration. And so seeing McGill sort of keep on pushing that and added in their donation request and all this, I think is a really big win. And I hope McGill provides more support and investment in that type of work. Because if you look at, if you take a step back and you observe like the university landscape, the truly successful universities like Stanford, MIT, these are my two favorites, for instance, and they release a lot of open source research, and they provide a lot of support to the engineers who are in their first year, second year, doesn't matter what their age is, and who are just out there trying to build new things. And university is such an amazing place for that, because you meet so many people. It's such a dense environment to meet different perspectives and really bring ideas together and market, basically. And so if McGill could keep on doing that, I think that would be a really good thing for Montreal, Canada, and overall the world, because there's a lot of smart brains on campus.
Yeah, I think it's been great for the ecosystem. And like you said, it's crazy to think where it's only been 4 years. It feels like longer. You mentioned 2015.
Yeah, I know.
Did you have a plan to get into venture capital after, or you just kind of stumbled into it after when you went to Real Ventures?
Completely stumbled upon it quite randomly. Well, I guess. So when I built the program the first year, one of the goal was really to bring advisors and mentors around the program. And so, of course, if you go around Montreal and you start knocking on doors, you're going to knock on Real Ventures' door. And the team there was extremely responsive. In particular, Sam Afar. So shout out to Sam and Sylvain Carl, two great people and partners at Real Ventures who have been supporting the program since day one. And yeah, they, right up said, sure, we'll help, we'll do this mentorship thing. And then we sort of had a, sort of relationship going. I remember on the last days of the program, we brought in successfully the John Stokes as part of the sort of final pitch prep. He's sort of well known for helping founders craft their narratives. And so everybody at Real Ventures took the time to support this new thing that they had, there was no track record. And then, so once the program was done, we sort of kept the conversation going. And at the time, there was a spot that was opening up at Real Ventures as part of the FounderFuel program to run this thing with Sylvain. And yeah, after a few coffees and meeting different people in the team, there you go. We decided to do this together. And funny, because at the time I had booked my tickets, one-way ticket to go to Los Angeles with my now ex-girlfriend. And so it was a big shift in terms of life path, I would say, and quite happy about it.
Yeah, it sounds like you followed a little bit your passion, right? You didn't really say, okay, this is going to be a specific way to move forward. And it kind of feels that you've also done that in the next move in your career. And I'd like to maybe understand, what is a digital asset custodian? And we could talk about KNØX.
Yeah, so there's this notion of digital assets, and this notion, and basically it encapsulates a bunch of, what's also called, crypto assets. And I used to be a supporter of that, and now I'm
what do you mean? Supporter of what exactly?
Of those crypto assets and crypto in general, the term crypto. And so basically, perhaps I can tie this back with the end of my experience at Real Ventures. So in late 2016, early 2017, Real Ventures brought on an analyst in the firm and started building an investment thesis around crypto. and what it meant for venture capital, because you would see all these products and all these protocols emerge in the crypto space. And the reality as a venture capital firm, you're bound by your LPA, so limited partnership agreement, and that basically tells you as a manager that you can only allocate in the venture capital asset class. And so crypto kind of fell, it was outside of that class. It was a new type of asset, a different liquidity profile, and you were not buying equities in corporations, you were buying tokens in a network. So it was sort of interesting in that regard. And so we had to sort of figure out, okay, like what does this mean for investing, and like how can we build a thesis that makes sense to us, and then that we can basically, sell to LPs and then once we have that thesis, how do we execute on that thesis?
Mm-hmm. Did it require, like without going into the details, did it require a separate fund? Did it require approval? Like
that was the whole reflection at the time. Yeah. And so
you saw it with like some well-known venture capital funds, like I'm thinking of A16Z, that they completely changed the nature of the firm to be able to invest in not just in private.
Right. Well, Andreessen Horowitz, A16Z, who they raised $300 million for a crypto fund. And they basically acquired traditional financial services licenses to be able to do that and be a registered financial advisor and investment manager, right? And that is because a lot of these tokens they fall under traditional securities law. And so anyway, like that is one thing, but just the notion of investing in an asset that was not equities in a business and that actually fell under another type of asset classification, which is a bearer instrument, meaning that once you invest in Bitcoin, for instance, and I have to go back to the notion of crypto versus Bitcoin, you hold a bearer instrument, meaning that the private keys that are the underlying physical representation of that asset actually makes you the rightful owner of that asset. But you're responsible for holding that Bitcoin, that key, right? And so the challenge here is, well, as a fiduciary, meaning, Real Ventures fund manager, which is managing other LPs' assets, and any other fiduciary, they cannot do two things at once, which is executing an investment strategy that was approved by, a group of investors, and also doing custody of the asset in which you're allocating capital. So there needs to be a very strict segregation of duty between custody and execution. And so execution is taken care of by the managers, in that case, a venture firm talking with founders and investing in those companies. But the reality is there's no the custody for traditional equities there's no such things because it's not a bearer asset. Whereas for Bitcoin, it's very different. And so that brought a really interesting limit and friction also in the deployment of such an investment thesis. And so this is where actually we started looking around for services and or companies and products to help solve that problem, right? And so at the time, and it's still the case, there were those hardware wallets, and without going into details, it looks like a USB stick that allows you to securely store those private keys. But the reality is, if you're deploying a multi-million-dollar investment strategy, you're not going to hold $5 million on a USB stick, and your CFO is never going to want to hold that risk, and your auditors are never going to approve that ever. So the service of custody was a big missing piece of infrastructure in this space back in 2016, 2017. And so that's how we actually met KNØX, and that's how I sort of got in touch with these guys and then made the move to their company. Yeah,
because I was curious as to okay, what exactly is it, in prepping for today, what is a digital custodian? What does that mean? And so you raise a good point, right? I guess for, the consumer space, you have, things like CoinSquare, Coinbase, which are pretty well known and obviously on their path. But from a from a larger investor perspective, it's like, well, you're not going to use a Coinbase to store, millions of dollars.
Exactly. And Coinbase is what's called in the industry like an on and off ramp, meaning that it allows you to get exposure to Bitcoin by selling your fiat currencies, whether it's Canadian dollar, euro, or whatnot. And also sell back your Bitcoin to fiat. But one should not hold their keys with Coinbase, because Coinbase, again, it's an exchange. It allows, basically what they do as a market participant, they allow to match orders between, bid and ask. They could spread, but they should not, and they're doing it today, but they should not be doing custody. And right now you see these companies in the quote unquote crypto space that fulfill many different functions at once, and that creates a tremendous amount of counterparty risk. Because when you're trading with such a counterparty, you're exposing yourself to trade execution risk, meaning that, let's say, the order book is not deep enough and you're an institution buying a large chunk of that order book, you're going to get slippage, meaning that the trade, you may move up the order book and pay more for the price that you had set at the beginning of that trade. So that's bad. Custody risk as well, and we can speak about this further with KNØX, for instance, but most exchanges, because it's not their business, they don't have the proper way to transfer risk off their books, meaning they don't have adequate insurance coverage for the risk around custody of that asset. Because again, there's a lot of hacks, and we've experienced that firsthand in Canada with Quadriga CX. They lost, it was last year, they lost roughly $200 million worth of customers' funds. And more recently, Einstein, another one. So it's a massive risk in the space. And there's a bunch of other risks that are related to Bitcoin.
So going back to KNØX for a second.
Yeah.
So if I understand the business model, you take funds from large institutional or private investors. You keep them as a custodian. What is the business model? Like, so in essence, how do you make money? And then B, how do you build that trust? So like, how do they ensure that, you guys are not just another Quadriga and, you're not going to, fake your own deaths and run away in Thailand.
Right. Die in the Bahamas with all that Bitcoin. For sure. So that's the big challenge. And it's funny because we always talk about Bitcoin being that trustless asset, and yet all the entities exposing one to Bitcoin need to have some kind of trust. And the reality will always need to have trust, because that's how humans trade and do commerce. There's a little bit of trust always. So going back to KNØX, so we're aware that we don't have the brand equity of a Fidelity or a Citibank or whatnot. And we don't even have, the balance sheet of these players for sure. Like, you look at these asset managers, they don't hold billions, but trillions of dollars. So they're pretty well capitalized. And, though we raised $8.25 million last year as a seed round, like that is a number that it's not even a rounding error on the balance sheet of these entities that I just mentioned. It's just nothing. It's very small. So how do we, create trust in that marketplace? And the approach we took was, well, you know what? Let's actually leverage insurance markets as the best proxy of risk pricing, meaning that if an insurance company is willing to give you a policy to cover a bunch of risk related to your operational activities in your business, that insurance company has skin in the game, meaning that you're going to pay as an insuree premiums to this company, and that company, this insurance provider, is acting in a rational way and actually trying to make a profit out of that. So they expect that the premiums are going to pay will outgrow the claims that you may have to ask this company if you were to be hit by a claimable event, right? And so basically it's like, you know what? Don't trust KNØX. Look at how insurance companies price our risk, and basically in the act of custody, which is we're managing Bitcoin private keys of our clients, all that risk that we originate is actually transferred to insurance providers and companies. And so we work with a broker to do that. And basically we don't hold any of that risk on us. We basically send it to the different insurance providers, and these providers, we pay them premiums for it. And if there would be a claim in the future and, you know, we get hacked or there's an issue and that results in a theft or loss event, this is covered by this set of insurance providers. So it's like, don't trust KNØX, and we believe, again, this should be a generalized behavior in the space. Most custodial entities should leverage risk transfer mechanisms and insurance in order to be what we like to call a trust minimized counterparty. And that, I guess, respect the Bitcoin ethos in a way. And it's extremely important because you're dealing with a bearer asset, meaning that there's no lender of last resort. There's no bailouts in Bitcoin, because you can't just print more Bitcoins and make a company that was solvent again. So that's why insurance is extremely important. And we believe that phenomenon will grow tremendously in the next decade. And so part of our goals at KNØX is to help sort of advance that and in particular commoditize the stuff that we're doing, meaning private key management or custody. And so you look at custody today in traditional financial services and the securities market, it's led by 4 entities. So BNY Mellon, State Street, Citibank, and I think it's HSBC, the 4th one. And these companies, those 4 companies, they hold over $100 trillion of assets. And they're custodial banks. Nobody really know them because they're sort of like servicing other commercial and even central banks. And so anyway, the goal is, the point that I'm making here is that the fees that they're making on custody is like close to zero. It's a few bips per year and that's it. Today, the fees for Bitcoin custody is roughly like between 20 to 60 bips per year. So basis points, which is like not even 1% on all your assets that you're storing at these companies. And we expect that to go down. And so basically,
so like the business model for a Coinbase to simply be the store of value is not really high.
Exactly. And Coinbase doesn't make money on that. Coinbase make money on just like taking commissions out of all the trades that are being executed on their order book. And so for KNØX, we're aware of that, and we believe that custody and private key management should be very much a commoditized function of the marketplace. And basically, we want to help accelerate that and make, the software open source, the operational procedures required, put the blueprint out there and make that ubiquitous. And then how do we make money? Well, right now we're charging an AUC fee, which is a function of the assets under custody that our clients have with us. And that includes as part of our cost, we basically have insurance premiums that we're paying, and we take a margin on top of that. That's a very simple, straightforward business model, but that will tend to go, like the margins will tend to go to zero. And so in the future, the goal, the opportunity is really on the risk transfer. It really is on the insurance. Because if you're open sourcing all this technology and helping nurture standards in how companies do private key management and custody, and you understand very well the attack vectors and the entire attack surface of such a system, then you can better price risk and help transfer it from companies that originate that risk using those frameworks, those operational models. And so then the opportunity is really on the insurance.
Yeah.
being able
fascinating,
to transfer that risk off. Yeah.
It's pretty fascinating. It feels like you're really at the beginning of this whole new industry, and then like also kind of like a parallel universe,
Oh yeah.
creating like a separate financial system. And so maybe one last question on KNOX before we talk about your thoughts on the industry, maybe on Bitcoin more specifically. So you're head of growth there. So like, how does growth work for a company like KNOX? Or considering that you're going after like large, I mentioned large investors. So it's not, curious as to how you're performing your role, what you're doing exactly to help grow the company.
Yeah, and it's a great question. So I wear different hats. That's the first preamble. Working on three major functions, I would say. So product, marketing, and sales. And on product, it really is working with the engineering team and basically all the features we get from clients and prospects, while trying to fit as much as we can in the sprints and in our roadmap, and then arguing with our CTO and DevOps guys to like try to basically have as many features as we can in the next release. That's the first function of the role. Second, and I'll start with sales. Sales is a particular concept in that space, because you're selling to risk averse people, rightfully so, right? They're like capital allocators. Their goal is not necessarily to make money, it's just to not lose money. And so, some traditional wealth managers that are looking to get exposure to Bitcoin are going to be extremely, again, like skeptic, and will do extensive due diligence on us and on other counterparties in the space. And so that really creates a interesting dynamic. And the reality is the sales cycles are long. I would say longer than traditional enterprise sometimes.
Yeah, so you have to work with
multiple months.
Wealth managers and convince them, and like it's a long process, right?
It's a long process, yeah. And it's really interesting also because you get to learn how these traditional institutions work, making decisions in committees of committees. And so it's really fascinating. And the third piece is really marketing. We've been extremely low profile, and we've been operating under the radar for a good 18 months. And that was because of our focus with direct sales. And recently we made an announcement, I think it was back in September, publicly announcing our first insured accounts, which we came to believe as, one of the few, if not the most comprehensive insurance coverage for such a product, meaning it's a cold storage Bitcoin private key management, which is cold storage stands for it's completely offline. Like it's a secure system that you quarantine away from networks and the internet to reduce the attack surface, reduce the risk of that system. And so basically on marketing, we're working now on producing a bit more content, and we're launching this publication, and we hope that we'll be able to educate more the marketplace, share our views of how we think about all the risks involved in Bitcoin and in the space, and have the conversations that matter from that.
Yeah, super cool, man. Super cool. And maybe to zoom out and talk about Bitcoin more specifically, why do you think there's this like almost religious fervor? Talking about Bitcoin Twitter, but like people that just obviously follow the asset. We could probably play a little bit of like, bull versus bear case, but but anyways, I'll just go straight to it. Like, why do you think there's this level of enthusiasm that is like, I understand it's cool. There's like, it's a new way to move forward in terms of its current use case, which is store value and its potential. But it's like, okay, but this is not a religion. So I'm just curious as to how you see it.
Yeah, it's a fascinating point you brought, and there's a lot to unpack. Where to start?
We'll start at the highest level. So, why do you think it engenders this level of like enthusiasm?
Yeah, so I think Bitcoin is the world's first honest money, an honest system, because it is so transparent and verifiable. and inclusive. Meaning, well, actually, Bitcoin doesn't really care. If you're interested in learning about it and buying some or building on top of it, you can. And I think that is the fundamental value behind Bitcoin, is that it is a voluntary system which is open to anyone to participate, regardless of where you are, where you live, what's your economic background, what's your sexual orientation, it doesn't matter.
But does the US dollar care about your sexual orientation or a Canadian dollar? I understand that it's maybe more opaque in the sense of there's multiple layers and people with guns that are protecting it.
Right. Well, the US dollar, it requires, if you want to participate in that market, unless you actually hold physical dollar and you don't want to have a bank account, you're going to have to leak all your personal information to a trusted third party, which is called a bank, to basically allow you to participate in that system. And for us here, in this beautiful office in downtown Montreal, there's zero issue for us. We don't see a friction here because hey, we're lucky to have, a home address, we're lucky to have a job. And basically the point that I'm making, it's not, and this is not about virtue signaling, look, I care about, people who are unbanked and all this, because this has been a narrative that's been spread over and over again. But that's the reality. It's even if I'm in the United States or in Canada and I want to participate in a financial market, you have to trust a third party with all your personal information. And we've seen it with Equifax, we've seen it with Desjardins recently. There are massive data leaks from these companies, right? And that is one vector of threat that is around the banking model in North America. But if you look around, the reason why Bitcoin is so exciting, to go back to your initial question, if you look at a bit more south, and of course Venezuela is the obvious example. You look at other hyperinflationary environments, they've lost everything because a government in tandem with a central bank debased the currency so hard to pay off their debt that all your savings of your family are gone. And that is a very much it's a super scary thought. It's let's say you have $10,000. In January of 2019, you had that. Today, you still have, it still shows $10,000. But those $10,000 used to buy you a car. Now it buys you a piece of bread. That's how, and that's not I'm not exaggerating. This is the level of inflation that is happening in other economies that are operating under the same system as our economies, which is you have a central bank, which is made of unelected officials that people haven't voted for, who have the control over the money production and who can arbitrarily buy in the open market debt that is issued by the government of that country to finance a bunch of programs. And yeah.
The key argument is one of centralization versus decentralization of this, right? So you're saying there's virtue, its main virtue is the fact that it's centralized and not controllable, makes sure that it can't be tampered with. Is that the main argument for it?
The main argument, right. Exactly. And if
similar, and then at the same time, a corollary question would be is the distinct from Bitcoin is, what Twitter announced, which I believe you saw because I saw you posted, going to having a decentralized protocol, right? So it's not one that's just applicable to Bitcoin as a store of value or as a current digital currency, let's say.
Yeah, going back to your point, it's exactly that. Like an analogy that I think resonated well last time I tweeted that, which was, Gutenberg printing press broke the monopoly on knowledge that the church had. Very simple. It allowed a massive distribution of books and prints, which allowed knowledge to be consumable by a lot of people. in a censorship-resisted manner. Because if you had a printing press, you could print whatever characters you wanted to print and distribute to the world. Beautiful. Now, of course, it's like, well, whatever. Like we have books everywhere on every shelf. Satoshi Nakamoto, which is the inventor of Bitcoin, is breaking the monopoly on money by the state. So what Gutenberg did between religion and knowledge, Satoshi did for the state and money. And that seems like a weird thought today, but if you look back in history and you start digging into the monetary history, you realize that money have never been a matter of the state, ever. It was a natural commodity that emerged naturally from the market as a monetary good. And that is, if I look at salt, spices, glass beads, and the latest being gold, right? It's like rational individuals who want to do trade, who don't necessarily have what is called a coincidence of want, meaning that, let's say I'm specialized in producing tomatoes and you are specialized at farming pigs. My tomatoes may not be ready when you are ready to exchange your pigs. And so basically it's like that creates debt at first. I remember that I owe this person that amount and that person that amount. But at some point you got to use another technology to make that exchange scalable. And that is what money is. And money emerges naturally because you're like, okay, like let's use this thing. It seems useful for money because it's neutral and we can exchange it for different goods and services. And so then if you start digging into that, you realize that the reason why certain things emerged in the past as money is because they had particular properties, like it was scarce, meaning that if I'm working really hard to farm my pigs, for instance, and you're giving me rocks for it, well, if anybody can like collect rocks, I'm getting screwed for my work, right? Because I had to collect grain and like farm those pigs anyway. You get the idea. And so that's why money needs to be scarce, and then it has to have a bunch of other properties, like it needs to be durable, it cannot be perishable, it has to be transportable across time and space, and finally it has to be divisible. So like I have to be able to buy a tomato with that money and a house as well. And so again, looking back at all these things, you realize that today Bitcoin is just the best money because it is solving the last two problems that gold had as a money, which was a great money, gold. That's why gold was monetized as a money for the last 5,000 years. And it was extremely valuable in a lot of economies and societies. But gold has two issues, which is it requires centralization. When you store it, the storage is extremely hard. And so you need massive vaults with massive physical security. And that basically, concentrated massive amounts of gold in banks.
In Fort Knox.
In Fort Knox, there you go, right?
That's good. And what about the idea of, like, going back to the second question about decentralization on, like, looking at what Twitter's trying to do, right? So similar to that. So, like, taking what Bitcoin has done.
So we'll park the two attributes that I wanted to share about Bitcoin versus gold. We'll park that. And
if you want to, go ahead. I'll let you finish. I did it.
But yeah, so basically, I'll keep it short. And again, that's why rabbit holes like around Bitcoin are like, man, tough to explore.
It's tough to keep it short because it's a complex subject. So
exactly, it's very multidisciplinary. But basically, long story short, gold sucks for security of storage and for divisibility, meaning that if I have an ounce of gold, like it's hard for me to go to the pastry and buy a baguette with it, right? And so it's not transportable. Bitcoin is solving those two problems while not making trade-offs on the scarcity. So that's why it is the best money today. And that's why a lot of people are excited about it, because it has also a bunch of other properties like censorship resistance, meaning that nobody needs a permission to use Bitcoin. And it cannot be censored, like the internet was not censored, could not be censored in the 90s when it emerged and governments were freaking out about it. And so Yeah, that is the main reason why Bitcoin is interesting. And so now you have a lot of other products and cool things being built around that notion of decentralizing trust. And that makes sense, right? Because there's a massively growing distrust in institutions, whether banks or governments or news, media outlets. It's hard today to trust anything. And the unfortunate reality is that a lot of people consume their knowledge by reading headlines of news that are basically focused on clickbait and are not focused on education and information, because again, like just the revenue models of these platforms is to attract as many readers as possible so they can make money off ad impressions. But anyway, going back to your point around Twitter, what Jack Dorsey announced is amazing, and it's something we've been discussing in the Bitcoin Twitter sphere for like 18 months now. And Jack is a big Bitcoiner, so for sure it's a super timely effort. And I truly see a future where Twitter is a social media protocol, meaning that the Twitter that we know today is just a client. It's a user interface that you can plug onto that protocol, which allows humans to share ideas and connect. And then, whatever client you run, it doesn't matter. And the data that is being exchanged on that protocol ideally will be self-hosted, meaning that you can bear your own data. I can, transport my own tweets and my own likes. And if I want to make them available to my followers or to other people that I'm interacting with, I can, but I also have the option not to. And this is a huge move by Twitter. So yeah, I mean, right now I think they have a team of 5. It's this research group called Blue Sky, and I'm super bullish about this, and I hope I'll be able to alpha test that as soon as it gets out.
Yeah, no, it sounds very cool. It sounds very cool. Thibaud, I think we could probably go on for hours talking about Bitcoin and security and a lot of the issues that you've raised. Maybe as a parting question, where can people find out more about the work you guys are doing at KNØX, and maybe more about your own thoughts on the subject as well?
Yeah, definitely. So I agree. We could go on for hours. So the best spot is Twitter. So my handle is TibM_. So THIBM_. And yeah, my DMs are open. So super happy to speak with anyone about anything related to Bitcoin, markets, KNØX, and many other things.
Amazing. Thank you so much for your time, Thibaud. This is great.
Thanks, man.
Thank you for listening to the Point of No Return podcast. Don't miss an episode by subscribing on iTunes or Google Play.